Hey folks, Vic here with your weekly trade video for Friday, April the 5th, 2024. On April 2nd, we held another one of Darko's Forex Trading Boot Camps, which is a free webinar. There's a link to that webinar in the text below this video or in the email that you received. And in that webinar, Darko covered his favorite pattern called a swing break rotation. And I'm recording this video on Thursday, April the 4th, which saw a pretty decent drop on the S&P 500 index. And in this video, I'll show you how you could have taken advantage of that little crash using the pattern that Darko just showed a few days before. All right? Hope you liked the video, and if so, we always appreciate the thumbs up by hitting the like button. And of course, be sure to subscribe to our channel excuse me, by clicking the button in the lower right corner of the video. Alrighty, let's take a look at this little beauty. Alrighty, let's have a look at this, and as I'm recording this, it is Thursday, April the 4th. And this is what happened. It was quite a setup here. So if you look at, this is the S&P 500. If you look at the trends, it doesn't matter. Like the monthly chart has just been straight up, pull back, a little bit of razzle dazzle here, and straight up, making higher highs all the way along here. Still in a big uptrend on the higher time frames. Same as the weekly, straight up. Okay, no, very few pullbacks here. This has been since last October, 2023. Daily chart, same thing. Just straight up here. Here's the beginning of 2024. Hasn't looked back until today. Now, let's have a look at this. And one thing to keep in mind: this is a short trade I'm going to show you, and this is it. That means it's a counter trend trade. Okay. Here's the thing, though: markets don't go up forever. They don't go down forever. And if you can recognize a reliable high odds pattern that suggests a top, it can be a great opportunity. Okay, but be sure to manage it very carefully, what we call hands-on, because you're bucking the trend. This is a strong trend, and you're going against it. Okay, so keep that in mind. So the 4-hour chart was the key to it here, with the weekly chart going straight up, and the thing is, it's well, I'll just cover this 4-hour chart first, and I'll get to some other points I want to make here. But as price was going up, you notice on the 4-hour chart, it's just going up and pulling back and going up. Actually, it never broke this high. It just consolidated and broke higher again, pulled back, broke higher again, and then this happened. And this is what's called a swing break rotation, okay? And not just any swing break rotation. It's the strongest kind because of the fact that when price broke here, it closed above here, and when it dropped here, it closed below here, clearly closed above and below this point, above this point, below, and that's all covered in the webinar, so just have a listen to that. But do yourself, and I really mean it, do yourself a favor and have a listen to the webinar. This is also known as a head and shoulders pattern, the way that we teach it. Okay, not the way that others might show it, but the way that we teach it. This is a head and shoulders pattern. Okay, now notice that, go back to our higher time frames. What I wanted to tell you is that there is no reference point when you're looking left. Like if I look left on the weekly chart, where's resistance? Like there isn't any back here. There's nothing. It's just air. So there's no reference point. We're not hitting any particular known resistance. So this kind of a pattern is particularly good. And the reason is because it shows a shift in sentiment and institutional thinking. And it's a really good one to wait for because of the fact that we've done some damage. We've done some structural damage here by going down like this. What's interesting about the drop that happened right here is I always listen to the Forex Live, see what's going on with the news. The reason that was given for this drop by the media was that Iran was threatening to attack Israel. So there was a fear injected into the markets and a pretty sudden liquidation of stock. And of course, oil took off to the upside. But I always find it interesting that it's not uncommon for markets to set up technically for a move before the news comes out. Quite interesting. I've seen it many times before. Now look, the way that you get into a trade like this is you can look for Fibonacci retracements. I believe Darko showed this in the webinar. So you can look at, like, from here when it bottoms out and starts to rally, look for the 62%, 79%, or whatever suits you. It's always, if you can get higher up, you get less risk because your stop's going to have to go above here. Now here's on a head and shoulders pattern. This is like a left shoulder, a head, and a right shoulder, and this is like the neckline in here, right? So this level here, let me just put a horizontal line right there, is usually a great place to sell if price makes it up there. Notice that it's the same level as the 79% retracement. So this had a great move. Actually, this is probably, I think it was about a 3-to-1 reward risk at this point. So it's been a great move. But as for managing a trade like this, again, don't forget it's counter trend trade. They could have come out a few minutes later and said, oh, they decide they're not going to attack Israel after all, and everybody's happy, and it could have gone straight up and stopped you out. So you always have to keep that in mind. Okay, be vigilant with these things. And when you hit levels of possible support, do something. And everybody does it a bit differently. Trade management's kind of an individual thing. Depending on individual risk tolerance and how you read price action and that kind of thing. But either remove risk or take some or all of your profit when you hit some of these levels. For example, if you're risking, I don't know, just give it 25 points, and it got up 25 points, maybe you don't want to risk losing that. So you move your stop to break even or to your entry. Or maybe you don't, maybe you just put your stop above this level here. There's different ways to do it. Certainly when you hit levels like this, like see this high was the same as this low, you better do something about that. Definitely get the risk out, move your stop down, do something, and then it continues lower and lower. Now who knows how low it's going to go, and if the threat is real or not. And that's like I say, that's the individual thing about trade management. People are going to do it differently. But how nice that the S&P provided us with Darko's favorite pattern in action, right after he showed it in the webinar. So you can see how powerful this pattern is. This particular pattern has been very, very reliable. We've been using it for many, many years. Not every time, obviously, but most of the time it works really well, assuming, of course, the trade is managed properly. If you have any comments, questions, feedback, whatever, please let us know in the comments below the video, and I would be happy to get back to you. Or you can email me directly, by the way, vicnoble@forexmentor.com. Thanks so much, everyone. Take care. Have a great weekend.